Hello and welcome. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. First up, let's begin with headlines. India is gearing up to become a 30 trillion economy by 2047. This as per a Niti Aayog draft vision document for India at 2047. Throwing up interesting highlights on government's sectoral ambitions and roadmap for India's growth. Also on the show, Reliance Jio introduces JioSpaceFiber, India's first satellite-based gigabit internet service to provide high-speed internet services and potential contender, or could be a potential contender, to Elon Musk's Starlink. Indian telecom operators continue to battle low revenues, remain split on tariff hikes as they discuss the roadmap ahead for telecom sector on the sidelines of India Mobile Congress. Also on the show, BigFM is close to being sold. Radio Mirchi and Sapphire FM bid to acquire BigFM for over 240 crore rupees. BigFM is owned by Reliance Broadcast Network and is currently undergoing bankruptcy proceedings. And headcount at IT firms declined for the first time in 25 years. 9 out of 10 software services firms saw their workforce shrink in 6 months. The sector employs nearly 2 million engineers. All right. Karthik Malhotra with me in the studio as usual. Karthik, good morning.
Morning, Shweta.
Let's start with the biggest story that we're tracking on this Monday morning, and that is what could be India's economic size by 2047. The grand vision document, we are given to understand, outline has been laid. There is a roadmap ahead looking to become a $30 trillion economy.
Shweta, I hate it when you put me in a spot, especially on a Monday morning. And I think, hi, good morning to everybody. It's a Monday morning and the data coming out, or sort of the vision coming out from Niti Aayog, in fact, a consultation paper in sync with what Prime Minister Narendra Modi in the month of July had said, something called Vishwit Bharat by 2047. This, of course, is in sync with the Amrit Kal, 25 years remaining for India to become a 100-year-old democracy, a 100-year-old independent country. The data suggests, or the vision suggests, that by 2047, we are looking at our economy to grow to a size of 30 trillion. But what has happened in the past? In the past, we've set out a goal of 5 trillion by 2022. We've seen what happened to that, right? We are still at about 3.75 or so. Now, 30 trillion, of course, good number, big number. At 30 trillion, even by 2047, we would be almost the size of what the US economy is at present. So as a number, it's not bad. Discount that number over time, discount that number on the rate of inflation over the next 25 years or so, 30 trillion does not seem like a big number. But, I've run some calculations myself after reading this story this morning, Shweta. And what is the size, or what is the rate at which India needs to grow to get to 30 trillion? I think right now we have set ourselves a target that we want to grow at 7.6% annually, so that by turn of the decade, by 2030, we are the third largest economy, and we are, on average about a 7 trillion odd economy by 2030, about 5 trillion by 2027, 2028. Now, 7.6% in itself is a high growth rate, but to become a $30 trillion economy by 2047, do you know what is the rate at which India has to grow? Yeah. 8.7%. So 8.7% consistent annualized growth year on year. When this year, and we've been the fastest growing large economy, major economy in the world, this year, according to RBI's own projections, we're going to grow only at about 6.5% or so. So if you look at the overall long-term vision of 25 years, we don't know what kind of black swans are up ahead of us. We know for a fact that IT is going to become a casualty perhaps next year, and all of the next year and a half, FY25, is slated to be a washout year for IT. We've seen that in the numbers, the quarterly earnings. We've seen that in the way headcount is getting lost. Right now, we are living in a time when there are two wars being fought. One right in the middle of Europe, you're talking about Russia, Ukraine, and the other one in the Middle East, where oil becomes a major sort of, source of anxiety for the rest of the world. So given this entire block, for India to look at growing at 8.7%, to my mind, is being overtly ambitious. Okay. Is it too big a number? It's not a big number, because 30 trillion is still going to be, like I said, just the size of what the US economy is right now. And even if US continues to go at a clip of about 3% year on year, and let's not discount China is hit right now, China is going to come back, bounce back at some point. So 30 trillion, great vision, great idea, lovely headline. Are we going to get there in the next 25 years? Great if we grow at 8.7%. Excellent if we get to that number. But again, we'll have to see what is our rate of growth vis-a-vis the rest of the world. And if IT sector becomes a drain, if IT sector becomes a drag on the economy, are we geared up to really optimize the China Plus One strategy and become the factory of the world? We are getting there. Will we get there fast enough? Because every year that we miss the target of 8.7%, I mean, I'm jittery about the 7.6% target only in this decade itself. But every year that we miss that 7.6 or 8.7%, depending on whether we want to be a $7 trillion economy by the turn of the decade or a 30 trillion economy by 2047, every year that we miss that target, the subsequent years, the pressure on growth will be even higher. So 2-3 years of missing this number means we are looking at double-digit growth every other year till 2047. That, to my mind, is being overtly optimistic, if not just trying to generate excellent headlines.
Okay, but it does generate excellent headlines. What's the per capita income that one would need or one would need to have to be at 30 trillion by 2047?
So what Niti Aayog is saying in its vision paper, which is likely to be released in December, Niti Aayog says that India has to strive very hard to get out of this middle income trap. Now, this middle income trap has 2-3 connotations. The first connotation being that you have high wages or low productivity or low wages against high productivity.
Right.
India falls in the former. If you look at the per capita income, a middle income economy is roughly in the per capita income range of about $1,000 to $5,000. To become a high income economy, you're actually looking at that per capita income to go up in the range of about $10,000 to $12,000 per individual. India is still a middle income, smack in the middle of the middle income economy. So we are looking at per capita income to also go at least 5 times higher from where we are right now.
All right, and very ambitious target there, but that is the vision document for India at 2047. Important to remember, this is 100 years since India got its independence. So 100 years post-independence, a grand vision roadmap laid out there for India to achieve. Will it happen? Won't it happen? We'll keep tracking those details. But moving on to a story that is coming in by the way of Reliance. Reliance, it appears, Jio is giving tough competition to Elon Musk. As far as Starlink is concerned, it's offering high-speed internet. It was introduced on the sidelines of India Mobile Congress.
That's right. In fact, the announcement came on Friday. JioSpaceFiber, as it is known, is going to pilot or has initiated its pilot, which is going to transmit 5G speed, 1 gigabyte per second internet speed to remote rural areas. The pilot has been kicked off in Andhra Pradesh. But what we understand is that it is going to be a service which will be device and technology agnostic.
Okay.
It means even if you have a 2G phone, you have a 3G phone, a 4G phone, a 5G phone, or just a phone that receives Wi-Fi, does not have cellular like many tablets do, you will be able to receive a speed of about 1 gigabyte per second.
Okay.
Now, this of course comes at a time when, of course, Starlink has also, not minced its words and said that it wants to make an entry into India. This came out in the month of July, August this year, and we don't know when, if there is a roadmap, when that really happens. But I think what is also important to understand is that, Jio is actually asking the government to use the funds under its obligation, service obligation. There's a term called USO, Universal Service Obligation, in which the government of India has funds in excess of 75,000 crore rupees. So what Jio wants to sort of do is that it's telling the government that let the heavy lifting of capital investment be done by the government. Don't expect the private sector to actually, invest in space fiber, invest in these new technologies, because at one point you want to keep data costs low. If data costs need to be low, then if the private sector is making the investment, it will want to amortize that data over a period of time. That makes this whole concept of affordable, accessible data, oxymoronous, redundant. So the fact is that Jio is asking the government that in addition to the auction of spectrum for use of satellite-driven internet, use the USO funds of 75,000 crore rupees and waive off the 5% that that telcos pay to the government as part of the government's own subsidy on telecom, because it is part of the government's vision as well to keep data cost low. So I think we'll have to see where the story really goes. It's a great idea. It's a great concept. In fact, countries like UAE, countries like New Zealand have already experimented with satellite-driven internet, high-speed satellite-driven internet. I think it's a great vision to actually have remote rural connectivity of high-speed internet. But Jio is very keen that the government offers some sort of a subsidy so that the capital investment goes from the USO fund and not really from the private sector, because if the private sector makes that investment, data cost will take a beating.
Will go up. And remember, India offers one of the cheapest datas anywhere in the world. That's one of the reasons why Vodafone went under when Jio came up with very interesting data plans that were cheaper. More and more customer acquisition was made. Jio is currently leading the market, but the pangs of cheap data is hurting Airtel, it's hurting Vodafone, not so much maybe Jio at this point in time. That is one of the discussion that prevailed on the sidelines of the India Mobile Congress, where telecos congregated to discuss the roadmap ahead and also the feasibility of cheap data. How long can they afford to roll out cheap data without government intervening to help them either cut out on license cost, help them, monetize on 5G network very, very soon. Those were a part of discussions to lower the pressure on telecos.
So, Shweta, I think, the broad commentary out there in the world right now is higher for longer. We're talking about interest rates. I think the commentary for India's telcos is cheaper for longer. How long can you really afford to offer cheap data? Let's look at some numbers. What is the average revenue per user of the three broad telcos, right? You've got market leaders, Jio and Airtel, and you've got laggards like partly government-owned now Vodafone Idea, led by Kumar Mangalam Birla's Aditya Birla Group. And you've also got VSNL, BSNL, MTNL, the entire government pack, the PSU pack of telcos. Now, what are the average revenue per user numbers? Jio right now has an ARPU of about 182 rupees. Right. Compare this last year quarter, September quarter of Jio, you had an ARPU of about 177. So there has been a broad sort of 5 rupee up in ARPU, but that is actually lower than inflation. So technically speaking, ARPU has not really gone up, decoupled with the rate of inflation. Now compare this with Airtel and Vodafone. Airtel has an ARPU a little higher than Jio at about 200 rupees. Now, compare this with Vodafone. Vodafone is lagging behind at 142 rupees. Now, the point is, Jio has got deep pockets and Jio wants to continue keeping data, as Mukesh Ambani said, as well as Matthew Omen, the CTO of Jio, said that they want to keep affordable accessibility for longer. So, Jio has the wherewithal to keep data cost low and penetrate into what it is calling the 2G Mukt Bharat. So, 2G, offered by cheap data offered by Vodafone, BSNL, MTNL, Airtel, etc. That's the market that Jio really wants to go after. And it can go after that market if it offers 5G services or 5G speeds at the same price at which it is at which the customers are being offered 2G, 3G speeds by competitors. So Jio is very clear; it doesn't want to increase data tariffs. Airtel and Vodafone both want to increase data tariffs. Airtel is saying that a sustainable ARPU would be about 300 rupees. At the same time, the Cellular Operators of India Association, COAI DG, has come on record and said that even though India has been among the fastest rollouts in terms of 5G, that 5G speed has not translated to 5G revenues. So revenues have not, gone up in sync with data speeds going up with the advent of 5G. Now, at the same time, Ashwini Vaishnav, Telecom Minister, is saying that India wants to continue being a country which offers the cheapest data in the world. Now, India's ARPU, roughly average out at about 180 rupees a month or so, is actually the cheapest in the world when you look at global ARPU ranging between 600 to 850 rupees in INR terms. Dollar conversion. Even competitor China, our neighbor, hostile neighbor China, has an ARPU of about 580 rupees. Compare that to about 180 rupees for India. Government is very keen that, disbursement of cheap data happens. You're able to use these, multiple applications which ride on data.
But now, this is a conundrum, come to think of it, Karthik. On one hand, we want data to be cheap, accessible, democratized data. On the other hand, telcos are taking a beating. It hurts their revenue. It hurts their bottom line. Where do you come at a consensus?
So I think markets will have to define what the ARPU will be. The deeper your pockets, the more you're able to subsidize data, the longer you'll be able to run in this race, and the more likely you are to win that race of cheap data and aggregating, acquiring a lot of customers who ride on that to, in any case, offset the capital investments that you've made.
Okay.
So one simple line theory, I think there's no doubt Jio is going to continue to be the front runner when it comes to cheap data. It is going to continue to eat into the market of Airtel and Vodafone. Airtel will find it more difficult. It will continue bleeding. Vodafone, I don't know what is going to happen to Vodafone.
Are we heading towards a monopoly
A
in
duopoly,
the sector?
definitely in the short term.
We are here.
A monopoly, I don't know. Are we going to become, will the government permit the telecom sector to become a monopoly? We don't know. But there's an interesting proposition again, which is being discussed between the telcos, which is that there are 4 or 5 apps which are responsible for maximum data being used by users. And perhaps a case should be made for these apps to actually pay telcos.
Interesting.
So they haven't named these apps, but to my mind, I think
we
YouTube
know.
is going to be one of them. Facebook is going to be one of them. Facebook, Insta, X, I don't know. I think, it doesn't have too much video being consumed as opposed to maybe now it would.
Will,
but I think YouTube, the entire Facebook, WhatsApp, Instagram combined, these are going to be some apps where I think telcos are expecting some sort of a policy measure where, while for the users data continues to be cheap, some part of that gets offset by these large data consuming apps.
Not sure if that's going to happen anytime soon. There's going to be a huge pushback from these social media
Sure.
giants, but that of course is one of the suggestions that telcos are making. Telcos at this point in time bleeding under pressure from very little to no margins and trying to find a way forward as far as telecom sector in India is concerned. But moving on to a story we're tracking by the way of BigFM. It appears that BigFM will finally be sold. Could be Sapphire, could be other competitors, but the current valuation for the company has come in at about 240 crore rupees.
That's right. So I think there was a default prompted by IDBI Bank. IDBI Bank pushed BigFM, which is owned by Anil Ambani. It's Reliance Entertainment, Reliance Broadcast Network Limited, which was pushed into involuntary insolvency by IDBI Bank, and there was a default allegedly of up to $1.7 billion worth, right? So there has been a bid made, which we know for sure. Radio Mirchi, owned by Times Group, as well as Sapphire FM, have jointly bid to a tune of about 281 crore rupees each. And I think it's a matter of time, hopefully within a month or so, we should know whether that application is being entertained or not. Depends on the resolution process, depends on the resolution professional in this case. And see, I think it's very clear that BigFM will have to get acquired because of its inability to pay its creditors. Now, will it come by way of Radio Mirchi and Sapphire FM, or are there going to be more players in the fray? We'll have to wait and watch, but I think 1st Feb 2023 is when this insolvency proceedings had initiated. So it's been about 10 months or so, a matter of time before there is some sort of a consolidation in the private FM radio station space.
All right, private FM radio space heading towards a consolidation. Big players bidding for BigFM. We don't know when the deal will come through, but we are given to understand it's almost closing. But before we leave, a very important story coming in from IT space that employs over 2 million engineers. It looks like from the data that has come in from at least 9 out of big 10 IT firms that there is a shrinking workforce. The headcount is declining for the first time in 25 years.
So, Shweta, I think the first half of this year, April to September end, we've seen almost 50,000 IT professionals lost from the jobs at these big 10 companies, right? And I'm just talking about the big 10 that you refer to, within which the highest number of job losses have happened at Infosys. About 14,000 people lost at Infosys, followed by Wipro, about 13,000 odd employees or so. So about a smaller workforce of about 50,000 already, and we are looking at perhaps a continued war in the Middle East, which is going to keep interest rates in the US high, which is going to keep bond yields in the US high, which means cost of capital for US based companies which offshore work to India and outsource work to India is going to be further under pressure. So if cost of capital in the US and in Europe continues to be high, Europe likely to head into recession, there is going to be, I think, a more closer than ever before likelihood of a washout year for Indian IT professionals, for the Indian IT sector as a whole. So 52,000 odd jobs lost already. Workforce still, overall, the numbers are in excess of 20 lakh, 2 million. Could this come down below? We don't know. The results haven't been great. Q2 results haven't been great. Q3 likely to be more under pressure because the war in the Middle East started only on 7th of October. So great chances that H2 is also going to be a very, very tepid sentiment for IT companies. More job losses perhaps on the anvil, and bad news overall for India's IT sector.
Are engineers to worry at this point?
Tough to say, because you also have the advent of ChatGPT, you also have the advent of artificial intelligence. So can the mundane work be done by these chatbots? The simple answer is yes. You want to write a simple code, all you need to do is, a non-engineer can just put in a one-line query and the code comes up. Copy paste that code into your programming language and you have whatever you needed to develop. Something that has been developed in the past can easily be replicated. So you really don't need too many junior level IT professionals, coders specifically, doing the mundane job. But you would still need project management capabilities. You would still need, UI, UX designers with the advent of apps and the entire app ecosystem across the world. You would need some sort of innovation, which I hope to believe can still be done by the human mind, not as much by the computer. But yeah, I think lower entry level jobs are more likely to get impacted to my mind. I don't have data to support that, but just speaking from anecdotal evidence, I think low entry level, low skilled jobs, pure play coding jobs will continue to be under pressure. And hopefully, if the market globally opens up, then we should be able to reverse that as well. But we don't know where that's going to go.
All right. So upskilling perhaps. Upskilling is the need of the hour as engineers and jobs continue to take a hit in IT sector. We'll keep bringing you all those stories right here on Newsline. Thank you very much for watching.
Almost did not want to find out that Rajiv Gandhi was corrupt. Is it possible for a Prime Minister of a country to tell so many lies?